The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. What day are we today? Tuesday, January 15th. You can catch my show every day on TFNN from 3 to 4 Eastern, right ahead of the Tom O'Brien Show from 4 to 6. The number to use, it hasn't changed, 877-927-6648. If you can't listen live, you can head over to iTunes, pick the show up as a podcast. Feel free to leave a comment if you like what you hear. Don't forget you can listen to all TFNN programming on your smartphone. A lot of people do it that way these days. Just plug those earbuds in, open your smartphone browser, type in tfnn.mobi. Easy way to listen to the stream. And don't forget about Tiger TV. That is accessible on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but you can also look at charts live right along with me. Tiger TV is also viewable on your handheld device. The way to do that is open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the page, you'll see a little box with some mobile devices in there. Just click that, and it will start streaming on your cell phone shortly. Folks, don't forget about my webinar coming up Thursday, January 17th, my first webinar of the year at TFNN.com. It is for subscribers for my Ultimate Growth Stocks newsletter, but a 30-day trial entitles you to get the webinar for free. So paid subscribers have access, and if you're checking out the letter for 30 days free, you can also attend as well. So now is as good a time as any to sign up for a 30-day free trial to Ultimate Growth Stocks. It's been a good start to the year. And again, that webinar is Thursday, January 17th at 6:30 p.m. Eastern. It's called 2013 A Year of New Leadership. After the webinar and Q&A, you'll have a very good idea of how I approach the market, how I go about analyzing a stock from a fundamental and technical perspective, how I analyze overall market health to tell me when to be aggressively in the market as well as out of the market and favoring cash. Volume today on the New York Stock Exchange and NASDAQ tracking pretty close to what we saw yesterday, maybe just a little bit heavier. NASDAQ volume on Monday was slightly above average at 1.85 billion. That was skewed a little bit by well, maybe not. Actually, volume in Apple yesterday did not end up being that high. But anyway, NASDAQ volume on Monday slightly above average at 1.85 billion shares. We're tracking pretty close to that. Today, volume on the New York Stock Exchange on Monday below average at 588 million shares. Again, tracking pretty close to that today on the New York Stock Exchange as well. Tech stocks. Let's start by taking a look at the NASDAQ composite here. Last check, it was down about 8 points. Right now, down 9 points, 0.3% decline to 3108. As you can see, trading up near its session high after hitting an intraday low of 3,093. So, Apple weak again today. We'll talk about Apple in just a little minute. But with Apple acting so weak yesterday and today to have what could be two straight closes near session highs after early weakness. Another way the NASDAQ composite is kind of showing strength out there. So still encouraged by overall market action here. S&P 500. We'll see that it is trading at its session high pretty much, now up a little bit, up a fraction to 1471, well off its intraday low of 1464, so about 7 points off its intraday low. Decent session for the S&P 500 and the Dow Jones Industrial Average. Probably see a nice recovery of lows here. You can see the Dow working on 5 straight gains here after a kind of a mini breakout last week, still trading underneath its September high over here. So this is the thing with the NASDAQ Composite, S&P 500, and the Dow. They're still flirting with breakouts over these September highs. So we could see one last little shakeout before a breakout, but the New York Stock Exchange Composite and the Russell 2000 are the only two stock indices out there that have already taken out their September highs. So the Dow looking pretty good today, up 18 points to 13,525. Let's take a look at the NYSE Composite. We'll see the breakout in this index. Look at the September highs all the way over here, just over 8,500. Right now, the NYSE Composite is at 87.24. Up 7 points today, but a big gap up similar to the NASDAQ on January 2nd, and that was a bona fide breakout for the New York Stock Exchange Composite. And the Russell 2000, similar technical picture here. You had a recent breakout over 850, and then it took out its September high as well recently. So overall, I'm really not seeing major yellow flags out there. The distribution or higher volume declines that we've seen in the market, they've been mild at best, and you really need to look at your current holdings out there as well to assess overall market health. So you've got the indices acting pretty well out there, continuing to show resilience. And then when you look at the growth stocks that we talk about on the show on a daily basis, really, all of them out there are still holding above support. Many have moved quite a bit, so it wouldn't be surprising to see some pullbacks in coming days, but I expect that a lot of these pullbacks are going to be in light volume. They're going to come down to support and really not going to show anything in the way of meaningful technical damage. So overall, the technical picture of the market looks good. Growth stocks that I follow, really not seeing anything to be majorly concerned to think that we're going to be coming in meaningful fashion here anytime soon. Of course, really the only thing the market is focused on right now is fourth quarter earnings season. It is busy week this week of financials. We had Wells Fargo kick off financial earnings season, and then tomorrow we're going to hear from I believe Goldman Sachs and JP Morgan are Wednesday before the open, and then Thursday Bank of America and Citigroup. American Express, remember last week they came out with preliminary fourth quarter results. You can see American Express had broken out fairly powerfully. It's been under pressure the past a couple of days. It was lower yesterday, but not by much, finished near its session high. It got a downgrade today to neutral from buy at Goldman Sachs. Hit an intraday low of $60.03. Right now trading at $60.76, only about 6 cents off its intraday high today. So still down 45 cents on the session to 60.76, but up near its high. So American Express under a little bit of selling pressure the past two sessions, but showing resilience in its own right. The XLF. This is the financial ETF, the Financial Select Sector SPDR ETF, continuing to show uncanny price strength out here. So we'll see what Goldman and JP Morgan Chase have to say tomorrow. But this is really, a lot of charts look like this. Strong relative price strength, holding near highs, not giving up any ground, showing strength and support. So the XLF hanging in there pretty good. Bond yields under pressure. Looks like 6 down days for yields in the past 7 trading sessions. Let's check in on the 10-year note here. And we'll see they've been under quite a bit of pressure. The 10-year note right now down to 1.83%, down for 3 days in a row, and six down sessions in the past 7, it looks like, for the 10-year, and the same for the 30-year bond as well. Also under pressure today, last trading around 3.02%. That's the 30-year bond. So February gold today up $14.50, settles at $1,683.90 a barrel. The GLD looking vulnerable here. The big debate, do you get long, do you get short here? Still in a downtrend as far as I can tell here, with significant resistance at its 50-day moving average at 164. GLD right now at 162.74, up 0.7% on the day. So we'll see what happens when it gets up to that 164 level. It could take it out, but at this point, to start a new uptrend, I think you're talking the GLD is probably going to have to get up to 167 to start a new technical uptrend here. Still trying to rally here, but not in a technical uptrend yet. The dollar up today to 79.81. Let's check in on that U.S. dollar index. Talked a little bit about the dollar index in my weekly update that went out earlier today. But this is also in a downtrend headed into today. The U.S. dollar index was down for 3 straight days. It is bouncing a little bit today, but again, looks like resistance at not only at 80.20, but even if it were to get above 80.20, you're also going to have a pretty stiff layer of resistance at 80.85. So downtrend still intact for the greenback index here. And crude oil today, $93.28 a barrel is the settle for crude oil, down 86 cents on the session. A couple of oil names I'm watching here. Good day for shares of Oceaneering. This is a services company. Nice technical breakout over 67.45 today. Beautiful breakout, in fact. The company provides engineered services to the offshore oil and gas industry. You can see today's breakout up $2.36, 4.2% gain to 58.62. And the weekly chart here, let's find Oceaneering. There it is. This is really a classic base breakout here. Good technical structure, good setup. Excellent supporting action down here at the 40-week moving average. You can see how it never really gave up that support level, and it is weekly chart showing a breakout today. And here's the good reason for using weekly charts, because it gives you kind of a longer term perspective. You could actually call this a big long base on base pattern that started all the way back in the beginning of 2012. So looks like about a 13-month pattern here. You can see a breakout where the high here got taken out, but it didn't really rally that much. It settled into a new base. Again, find support at the 40-week moving average, and breaking out today. So Oceaneering, a very interesting name here in the oil and gas sector. Let's also take a look at Dril-Quip, DRQ. Another interesting name showing excellent relative price strength. DRQ outperforming nicely today, up 2.4% to 77.55. This one also is still in the early stages of a breakout, and its weekly chart will show us that. Dril-Quip, you can see I drew this line here. Still looks like it could be in the early stages of a move, working on its 3rd straight weekly price gain, but like the look of the technicals here, and fundamentals are outstanding as well. One more name in the oil and gas space when we come back. Lots of stuff still working out there. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Talking about some oil and gas names starting to look interesting out there. Oceaneering, OII, having a great day today. Drillquip also showing relative price strength. That's an equipment maker in the oil and gas space, and also in the same industry group as DRQ would be Cameron International. Cameron International, nice technical setup here as well. This is CAM on the New York Stock Exchange. Still trading well after a recent breakout over 57.78. Stock is outperforming nicely today, up 2.9% to 59.10. So this one is still within range here. Cameron International, the weekly chart here, similar situation. You can see some resistance up here around 60. It looks like forming the right side of a base here. Maybe you get one little last shakeout before a breakout. I talk a lot about that. Anytime a stock comes straight up off the bottom, you like to see a little meaningful pullback here. So maybe you get one little shakeout before it takes out that $60 level. But back to the daily chart here for Cameron International. Here's the high in the left side of the base here, set back in September, and breaking out today. So this one is definitely looking strong. You got a little bit of juice behind the move today. So Oceaneering, Drillquip, Cameron International, all looking stealth in the oil and gas space. We did have some economic data today. Pretty busy week of economic data. As a matter of fact, earlier today, December retail sales up better than expected, up 0.5% in December. That was above the consensus estimate of a 0.2% gain. Ex-autos, excluding autos, up 0.3%. That was in line. So you take a look at the XRT. A lot of bears out there in terms of the overall outlook for retail. More money coming out of paychecks, unsure about the strength of the consumer, but look at the bullish move by the XRT today. This is the Spider S&P retail ETF, up 2.1% today to 64.54. This is a legitimate breakout over 64, still within range here. XRT having a solid day. Some of the holdings in the XRT. It's a bit of an eclectic ETF because it owns a lot of names. I don't know that you wouldn't expect to be in the top 10 holdings. Its biggest weighting is only about 1.5%. So it's got a bunch of retail names in there. But Best Buy is in the top 10. Netflix, I believe Lithia Motors is in there as well. So some eclectic names in the XRT, but a bullish day for the retail ETF today. And you can see it's approaching its recent high of 65.47. But today does look like a heavy volume breakout, and definitely the fund has been under accumulation. You can see these big blue volume bars down here. Interesting that in November it flirted with a break below its 200-day moving average. So this technical picture has improved rather quickly, looking pretty strong here. Big winner in retail today. Let's take a look at XPR. This is not the type of chart that would be on my radar. It's still a ways off its 52-week high, but a bullish gap up for the stock today, up 23% in one day to 1734. Express EXPR is the ticker here. They cater to a 20 to 30-year-old male and female demographic. Strong holiday shopping season. The company raised its fourth quarter earnings guidance. Not a real big short position here. Some might think that there's a lot of short covering today in Express, and that may be part of it. But at the end of December, only 6.9 million shares were held short. Not that extravagant considering the stock trades about 1.8 million shares a day. So relatively light short position in Express. Another retail name not doing so well today. Let's check in on shares of Lululemon Athletica. I've been talking about some of these stocks that have made huge price moves over the past 3.5, close to 4 years. Some of these big bull market leaders in retail. We've definitely talked about Lulu, the fact that it's a late stage base here. This company sells premium yoga attire, so it's not uncommon to spend $100 for a pair of yoga pants at this store. They've got a loyal following, but it's a high multiple stock that is held to a high standard. Company came out late yesterday. They said that fourth quarter sales will be at the high end of its original forecast of $475 million to $480 million. Problem is, the consensus estimate for sales was $489 million, so that's a little bit light. They forecast earnings of 74 cents a share, which was in line. Keep in mind that since the start of the bull market in March 2009, Lulu up 1,600%. Has the big money already been made here? I think a good argument can be made that yes. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN, 877-927-6648. Better than expected retail sales data earlier today. We also had 2 other economic data points. December Producer Price Index. Trying to think the last time that wholesale prices came in and everybody just screamed, yikes, inflation. Seems like it's been months and months and months. Producer prices overall down 0.2% in December. The estimate was for a flat reading. Core rate up 0.1%, a little better than expected. Economists were looking for the core rate to be up 0.2%. So very tame in wholesale inflation. We also have consumer inflation coming out tomorrow, so we'll see what latest reading on consumer prices look like. We also had a very weak reading from the January Empire Manufacturing Index. Came in at minus 7.8. The estimate was for plus or positive 2 in January from minus 7.3 in December. So January Empire Manufacturing, very disappointing. Will be interesting to see what the Philly Fed has to say on Thursday, the day after tomorrow. So one more piece of major manufacturing data on the horizon. Taking a look at earnings, still a pretty quiet earnings flow here. It is going to get very, very busy next week and the following week after that. Going to be hard to keep up with them all, but Lennar had earnings before the open today. Home builder said that quarterly profit up 250% from a year ago to 56 cents a share. That was 12 cents better than the consensus estimate for 44 cents. Sales up 42% year over year to 1.35 billion. That was also slightly ahead of the consensus estimate of 1.31 billion. Average selling price for Lennar's single-family attached and detached homes rose 7% to 261,000. Orders climbed 32% to nearly 4,000 homes in the quarter, but that was slower than the 44% growth clocked in the third quarter. So a little bit of deceleration there. Home builders have been running for a while. We've been talking about this for quite some time. I just don't think they're buyable up here. I mean, the rally in the home builders started in July. So you can see Lennar not breaking down by any means. It's only down 36 cents today, 0.9% to 40.66, still holding comfortably above its 50-day moving average at 38.34. So a lot of, you can see volume very, very heavy today at 11.1 million shares, but the stock is trading in the middle half of its range, well up off its lows, and again, only down 0.9% on the day. We also heard from SAP, based in Germany. SAP getting hit pretty hard. Software names overall holding up pretty well today. SAP, based in Germany, it's a business software provider. They provided preliminary fourth quarter results. They report their full results January 23rd, but they came out and said that their fourth quarter sales are going to be a little bit below expectations. Gap down for SAP today. It's down 5.2% to 77.61, basically trading right at its 50-day moving average. SAP has been an excellent price performer in the market as well, but definitely looking vulnerable here. Some big sellers in the stock today. We talked about Ixia. Ixia had a nice breakout over 18 yesterday. Good follow through for the stock today. Yesterday, the stock gapped up, and this was a tough one because, we talked about Ixia, said wait and see if it forms a handle area. Then the stock just shot up out of the game before the open yesterday. They raised their fourth quarter sales outlook. This company is a maker of network testing equipment, but a good example of how you don't have to necessarily be afraid of buying a stock when it gaps up in price, because a gap up in price in very, very strong volume, it tells you that buying demand is so strong for shares. Sometimes you get follow through here, and that's exactly what happened with Ixia, up another 6.6% today to 20.51. So if you were in this name yesterday at 18.75, 19, you're at least a 1.5 more of profit today. So I wouldn't chase it at this point, but we've been on Ixia for a while. Good solid company here with good fundamentals. Tech stocks holding up pretty well today despite more selling in Apple. Apple had its price target cut today by Nomura Securities, down to 530 from 660. Shares of Apple down 3.1% today to 486.08. Trading pretty much at its session low here. Its low is 483.80. So almost a little more than 2 points from its session low. So they got Nomura cut its price target. The analyst over there, Stuart Jeffrey, lowered his iPhone sales estimates, cutting iPhone unit sales by 2 million to 48 million for the December quarter. That's Apple's fiscal first quarter. And that's going to be the quarter that we're going to hear from Apple pretty soon. And he also cut iPhone sales estimates by 4 million to 39 million units for the March quarter. On the plus side, Nomura did raise its iPad unit sales forecast by 1.8 million units to 21 million iPads for the December quarter. So a lot of information there, but in the end, you've got an analyst not all that keen on Apple's growth prospects and price performance, at least in the near term. We did hear from Facebook today. Facebook had their media event today in Menlo Park, California. Stock was very extended here. I think the entry point here, right around 28.50, 29, is probably going to hold up pretty well. It is under pressure today, down 2.5% to $30.18. 50-day moving average for Facebook all the way down at 26, but I wouldn't be surprised to see, again, Facebook pay a visit to its last breakout area, again, right around 28.50, 28.75 in that area. Company introduced a graph search feature today where users can search across different friends' timelines. Initially, the reaction by the market here is, okay, how is it going to help you make money? This seems to be more of sort of just a user-friendly feature for Facebook. CEO Mark Zuckerberg described the new tool as the third pillar of the Facebook ecosystem. The other two pillars, I guess you could say, would be the news feed and timeline tool. So kind of a interesting new functionality for Facebook, and but kind of went over like a lead balloon. Nothing. I don't think the stock's underperformance today is disappointment about the news today. I think it's more the fact that the stock has just gone pretty much straight up over the past 3 weeks, and you've got a little bit of profit taking here. I still think this one's going to be a stock that is going to have a good year in 2013. How about ARM Holdings, ARMH? This one probably headed into today would win the award for the most extended stock out there. ARM has just been a monster performer in the market. Remember in October, it broke out over $29 a share and just never looked back. Very, very extended stock going into today. Morgan Stanley downgraded the chip designer to equal weight from overweight, citing valuation. There's no question that ARM is a pricey stock, valuation-wise, trailing PE of 60 or 70, something like that, and selling at 30, 40 times forward earnings. But there is a very real growth story going on at ARM. Their annual earnings are expected to be up 21% this year and 26% in 2013. Yesterday, Piper Jaffray cut its rating on ARM to neutral as well. And again, the stock is down 4.4% today to 40.53. Would love to be able to pick up ARM here at its 10-week moving average. Let's take a look at its weekly chart here. You can see trading at 40.50. Its 10-week is pretty much at 37.50. So it's going to have to come down another 3 points. It's a strong enough stock where it may not, but I expect that 37.50 level could be solid support for ARM Holdings. Hospital stocks doing well today. I don't know their specific news in the group, but HCA having another big day here, up 3.3% today to $34.97. The issue here with HCA is you don't want to chase it, okay? You can see the stock has only one down day over the past 2-3 weeks. It's very extended after a recent breakout over 32. Again, last trading at $34.97. You're going to want to wait for a market pullback here, be able to get shares a little bit cheaper. But one rule, remember, when buying on pullbacks, because we are near a time, it may come sooner, may take a little while to fully play out, but with all the extended stocks out there, you're going to get pullbacks at some point. I mean, HCA is not going to be able to continue this trajectory. It's extended. Yes, extended stocks can get even more extended, but when you're looking to buy a name on a pullback, you really do have to gauge the nature of the pullback. There are going to be healthy pullbacks out there, and there are also going to be unhealthy pullbacks out there. Unhealthy pullbacks are those where you're seeing unequivocal signs of institutional selling. Healthy pullbacks are kind of low volume pullbacks where the stock isn't giving up much ground. Maybe it's declining in light volume, and you're seeing the stock close up near highs, telling you that buyers are around in some form or another. So just be able to decipher a healthy pullback from an unhealthy pullback. When the market does start to come in here, you're going to see stocks that break through support with heavy volume. Those are ones that you don't want to buy in a pullback. You'll see others that are behaving themselves. Orderly declines, not giving up a whole lot of ground, not much volume behind the selling. Those are the pullbacks that are buyable. So. And at this point, what I would do is, because stocks have been running for so long, I'm just going to show you a chart of 3D Systems here, which is continuing to show relative price strength. Another very extended stock out there. It's up another 3.4% today to 62.77. But I would take a daily chart and I would plot the 10-day, the 20-day, and the 50-day simple moving average. And this is what it looks like for 3D Systems. It's been such a strong performer. It's still holding nicely above its 10-day moving average at 59.44. Its 20-day is all the way down at 55.41, and the 50-day all the way down at around 48.50. So it would take a pretty serious market pullback, a meaningful pullback in the major averages for 3D to pay a visit all the way down to its 50-day moving average. I would say at this point, the 55 area would be a likely support level for the stock. Now, will 3D Systems come down in light volume? Will it show erratic, kind of wild price action when it does pull back in price? You just always want to kind of analyze the nature of the pullback. All right, also want to take a look at Catamaran Corporation. This is a provider of pharmacy benefit management services. Catamaran's still looking pretty good here. The stock is only up 5 cents today to 52.19, but this one is near the top of a long base that you can see started, when did it start? Started back early this year around the summertime. Maybe call this a base on base pattern, but here's the whole consolidation right here. But it's near the top of this base. The issue that I'm seeing with Catamaran, love the fundamentals here. This company should be able to grow annual earnings by a significant amount over the next couple of years, but not seeing any meaningful signs of accumulation yet in the stock. It is on breakout watch here. But when you look on the daily chart here, we'll go back to the daily chart, you're just not seeing, significant buying demand in the stock. I mean, you've got a big down volume spike here, a little bit of volume on the way back up, but some big sellers in the stock. Last week, you can see the volume here was bigger than any of the days it was moving higher. So like to see more signs of accumulation in Catamaran, but this one still has potential in 2013 as well. Okay, don't forget about the webinar. Again, January 17th, coming up the day after tomorrow, 6:30 p.m. Eastern. It's for Ultimate Growth Stocks subscribers. I've had a lot of great subscribers that have been with me for past couple of years. Got new subscribers, and I have plenty that are taking the 30-day trial. If you just sign up for a free 30-day trial, that will make you eligible to attend the webinar. It's going to be a great evening Q&A session afterwards, and any questions that I don't get to, I'll give you my email address, and I am one of the better email communicators out there. So anytime you send me an email, you will get a response. I know plenty of people will attest to that, but it always irks me when I send an email and I don't get acknowledgement. I'd like to practice what I preach. So if you send me an email, you'll hear back from me usually same day. Any question that you have about the market, individual stock, whatever it is. But after the webinar, you're going to have a very good idea of how I go about picking stocks. Again, use a combination of fundamental and technical analysis. Can't stress it enough. A lot of bullish stock charts out there. I hear about them. I see them every day. But when you kind of look under the hood and look at earnings growth, sales growth, return on equity, things like that, sometimes stocks come up very short. So it takes a lot more than just a bullish chart for me to want to put a buy recommendation out there. I target strong price performers in an industry group, not weak ones, and I like stocks that are in their early stages of being discovered by fund managers, not the late stages. And we'll talk about that during the webinar. Stick with me, folks. Final break coming up. We'll be right back. Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. A quick check on the markets here as we head into the close. Dow holding on to a small gain, up about 24 points to 13,531. NASDAQ Composite. Tech stocks under a little bit of pressure here today. Sentiment very negative around Apple. NASDAQ Composite down 8.5 points to 3109. S&P 500 clinging to a 1-point gain 1471. Coming up tomorrow in terms of economic data, we've got the Consumer Price Index for December. Pretty tame reading from the Producer Price Index earlier today. We've also got the Fed Beige Book coming out. That's just an anecdotal look across all of the Fed's districts. Anecdotal look at economic activity across the Fed's, 11 or 12 districts, I believe. Thursday, weekly jobless claims, housing starts also come Thursday. That's for December. Again, results from Lennar earlier today, pretty good, but home builders, I believe, generally under pressure here. Well, look at the iShares ITB actually trading up near its session high, up 17 cents to 22.23. Let's see what Lennar is doing, seeing if it's rallying back with the ITB. And Lennar is still under a little bit of pressure, but fairly muted selling pressure. Volume very heavy in the stock today, well above average, but Lennar only down 25 cents to $40.77. So home builders continuing to show relative price strength. So housing start data on Thursday, and the Philly Fed also comes Thursday, and then the Michigan sentiment reading for January, that comes Friday. Taking a look at some other financials ahead of earnings, let's take a look at Goldman Sachs, GS. Again, just showing relative price strength here. Nice breakout for the stock recently. It's a little bit extended up here. Very, very tough to chase this one ahead of earnings. We'll see what the company has to say tomorrow. $3.66 a share is the consensus estimate. That would be up 99% from a year ago. Sales up 29% to $7.8 billion. So Goldman Sachs down 14 cents today to $135.99, and then JP Morgan will also report tomorrow before the open. $1.19 is what is expected there. That would be up 32% from a year ago. Sales up 10% to $24.4 billion. JP Morgan in rally mode ahead of earnings, up 50 cents today, 1.1% gain to $46.38. And let's take a look at shares of eBay. That is, they'll be reporting tomorrow after the close. eBay under a little bit of pressure today, down 1.3% to $52.47. A lot of people expecting more strong growth at the company's PayPal unit. Thursday, Bank of America, we'll hear from BAC. I don't have the consensus estimate here, but Bank of America has been a monster performer in the market. Very, very extended up here after a recent breakout over 10. It is up 9 cents today to $11.56. And we're also going to hear from Citigroup on Thursday as well. So a lot of these financials, Citigroup as well, a little bit extended up here, but holding gains, holding near highs, really showing outstanding relative price strength ahead of earnings. So Citigroup today up 0.9% to $42.59. GE comes on Friday. We'll check in on GE ahead of earnings, and much different looking chart here, still far from its 52-week high. Shares of GE up 6 cents today to $21.18. We're also going to hear from Schlumberger on Friday. SLB. Mentioned some oil and gas names that look pretty good to me. Schlumberger, not my favorite name here. Still technically a bit challenged, down 19 cents to $72.58. We'll hear from Schlumberger on Friday. Have a great day. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern. Have a great day, everyone.